Hi everyone, welcome to this live webinar. Nice to be here with you all guys on the ForexTrade.com team. Anyway, today I choose to share with you this technical indicator, right, called Ichimoku Kinko-yo. It's a Japanese name, as you may know. Okay, so let's start understanding what the name of this indicator means. Okay, the fact is that the term Ichimoku can be translated from Japanese to something near instant view, okay, or one glance. Kinko in Japanese is the equivalent of equilibrium or balance, and yo means chart. So in one line, we can say that the full name of Ichimoku Kinko-yo turned into English means instant view of the balance chart, right? This indicator was developed by Goichi Hosoda back in 1969 when I was born, and from that point forward, the indicator has become a permanent feature in Japanese trading rules. That's why I have chosen today to show you the Euro-Japanese Yen dollar chart. I usually plot this indicator in Japanese Yen crosses. I'm not saying that in one works the same in euro dollar or I don't know, euro Swiss franc or pound Swiss franc, but it's a very common tool among the Japanese traders, right? I'd rather focus it in the Japanese Yen crosses because they will be probably watching these same things we are watching in the chart, and they will be probably reacting to certain levels or signals in a certain way, right? And we could take advantage of those. I found out, however, by empirical experience, that it tends to work better in Euro Japanese Yen and Dollar Japanese Yen, even better than in Pound Japanese Yen. Okay? That's just my view, okay? My experience with this particular indicator. Anyway, the idea of this indicator is that it's given me everything I need to trade. It acts as a signal, as a way to determine support and resistance, and everything else I want to know about the market. That's why at the same time signal and filter, and I don't need no much extra to add to my charts when I decide to trade with this indicator in particular, okay? The fact is that you can see the trend, and as I told you, the support and resistance levels, right? And get your buying or selling signals just from the indicator, okay? Just one thing. It works better in bigger time frames, daily, weekly charts, okay? It's better for long-term analysis. I'm not telling you again, it's not good in smaller time frames. But as it has been developed to longer time frames, right, it tends to work better when we are talking about a daily chart or bigger, okay? So let's start seeing which of these lines you're seeing right now represent what which color represents and what are they useful for, okay? Here we are. We have several lines, right? As you may see, this red one, a green line, a blue one, right? And the two ones, orange and gray, that form what we call cloud. We are going to define every and each of them and what they represent. And after that, we are going to see the indicator as a whole, right? When I'm done with my presentation, you can do all the questions you want, right? Anyway, the Tenkan-sen or red line you are seeing in the chart right now shows the average price value during the first time interval defined as the sums of maximums and minimums within this time divided by 2. In this particular case, it represents 26 periods, right? The other blue one, the blue line, right, it's called Kijun-sen, right? And it shows us also an average price, right, during the second time interval, right? It's the highest high plus the lowest low divided by 2, calculated over the 26 past period, okay? Now, finally, we have the Senku span, right? That show us the middle of the distance between two previous lines shifted forward by the value of the second time interval. That's the orange one, right? It's the Tenkan-sen plus the Kijun-sen divided 2 and plotted by 26 periods. This one is the sum of the other two divided by 2 and plotted to the 26 periods ahead, right? The gray one, on contrary, okay, is also an average price value during the third time interval shift forward, but it's for 55 periods instead of 26, right? And it's also plotted 26 in the future. Why these two are plotted in the future? Because these lines, regardless the color they are inside, this orange line and gray line tend to act as support or resistance levels. Of course, if they are above current price, they are resistance. If they are below current price, they are support zones, okay? So that's why we plot them to the future, because we need to know in advance where the pair will probably find a resistance zone or a support, right? And we will probably see some sort of reaction when we reach that area. Of course, you know that the indicator will be probably repainting, right? And after 26 days movement, okay, this will probably be different levels from current ones, right? Not the ones, this, I don't know, in 26 days, we will probably won't be at these two levels. They will be probably higher or lower. That will depend on the movement. But if for any reason we start approaching to those levels, we have a certain reference of where the pair might head, okay? And the fact is that being below those levels, we know the dominant trend remains bearish, okay? Because we are below those lines. Anyway, finally, we have this green line, okay, called Chicook span, okay, or lagging, lagging span, the green one. And the fact is that it just represents current price, right? 1185, okay, you can see that it's always attached to current price, plot 26 periods, 22 times periods behind, oh, sorry, not 26, 22. You will know, you will understand why. Let me show you if I change it to a 5-minute chart, okay? We will change it to a 5-minute chart. Sorry, I know it's disturbing, but you will see how if the pair moves the pip either higher or lower, this green line, okay, will be moving higher or lower following price. In fact, it's at that this time of day, we don't have too much of a movement in the price. But anyway, it's just to give you an understanding of where that line goes every second of the day, right? If we move higher, every line goes higher. If we move lower, okay, see, the green line is moving lower. Can you see that? Okay, it's just current price. Okay, plot 22 periods to the past. Okay, got that? Okay, I will tell you later for what it's useful. That's just to understand why it's there, right? Okay, let's go back to our daily charts. Now, we have all these colors, all these lines, one plotted one to the future, 26 periods, and the other lag to the past, 22. And in the middle, we have those colored zones. The fact is that the distance or the zones that usually came into both the gray, and the orange line, is the distance between these two lines is always colored and color cloud, okay? That is the Ichimoku cloud. This, as I told you, this time these two lines are pushed forward in time to represent future support and resistance levels, okay? That will continue to provide support to current trend until broken when it comes to time. That color area, the cloud that I told you, not only defines the trend, but also acts as support and resistance for price. A very big reference when we use this indicator says that if price is above the cloud, then the trend is bullish, and if the price is below the cloud, then the trend is bearish. As you may see, when we are above the cloud, here the trend has been predominantly bullish. Of course, it at some point it starts to change, and when the trend or the price action is below the cloud, the predominant trend is bearish. Okay, so if the price is above the cloud, okay, its upper line forms the first support level. So if we are above the cloud, the first support level will be the upper level of the cloud, which in that case is the 115 level. Okay, then if the price is below the cloud, right, like in this days, then the lower line of the cloud will be our first resistance zone. See how in fact it did act as resistance once it has been broken, and how price has been detaching from the cloud, extending its bearish trend after 2 failure days to regain the resistance area. Okay. One thing that is important to mention is the fact that when the price is inside the cloud, right, in between both lines, we need to consider the market as there is no trend, right? We are in the middle of a sideways market, and then on the cloud margins will be the support and the resistance levels to break to confirm a trend. However, when the price is hovering inside the cloud, that's a bad signal, right? To determine a trend at least. This is telling us that the market is moving sideways and we have no dominant trend in the market. Anyway, let's start with the technical signs coming from this particular indicator, okay? The blue line is used as an indicator of the market movement, right? The blue one that you can see right now here, steadily near the red one, as per 2 dojis in a row in the daily chart. However, if the price is higher than this indicator, which is not the case right now, as the price is below the blue line, right, the price will probably continue to increase. In the contrary, and this is the price, when the price is below the blue line, right, the further trend bearish momentum is probable. Okay. Also, the crosses in between the blue and the red line. Okay, let's go for one a bit more clear, right? The crosses in between the blue and the red line, okay, tend to be bullish or selling signals. A bullish signal usually takes place when the red line, okay, crosses the blue one from below, okay? A bullish signal would be this one, when the red one crosses the blue one from below, okay? Conversely, a bearish signal is given when the blue one, okay, crosses the red one from above, okay? The other contrary way. In this particular case, the red one is crossing the blue one to downside, and we are getting a bearish signal. Okay, the Tenkan-sen, okay, or the red one, is used as an indicator of the market trend. The red one is the one that's telling me which is the market trend. If this line increases or decreases, then we have a trend. When it goes horizontally, it means that the market has come into a sideways period. Exactly what we were talking about a few seconds ago when I told you that we have 2 dojis in a row. We have not a clear trend right now in the market, and the indicators are turning flat, okay? So it goes flat, that's telling me the market has come into a sideways period, and there's not such thing as a clear, strong trend. As vertical, the red one is, right? It's above the cloud. It's telling me there's a lot of bullish strength. Why? If the red one, again, it's heading lower below the cloud, it's telling me that there's a strong bearish trend ruling the cross. Okay, I know it sounds a bit complicated, but it's not as such. When you get used to this, it's pretty easy to understand. Let's go to it's a very important trading tip. The fact is that the relative positions of the blue and the red lines are also pretty important. Okay, basically a cross of the red line above the blue one is bullish, and a cross of the red one below the blue one is bearish. But we should also take care of the position of price against the cloud, okay, and the crossing of these two lines positions today against that of 26 periods prior that determines the strength of the signals. And here is when this green line comes into play. If this line, okay, if this green line is below that of the 26 days ago price, right? And the sell signal takes place, that is a very good and strong selling signal. Why? Because this red line, meaning today's price flow 26 periods back, it's below 26 days ago current price, right? It's confirming me that the bearish trend is pretty strong. On the contrary, if I have, a buying signal, right? And of course, the buying signal should occur above the cloud to be considered a good one, right? The green line should then be above the price the pair had in that particular moment. If I have right now a buying signal and with this green line way below the price of that time, right, then that buying signal should not be considered a good or a strong one, okay? Why? Because the green line is below the price of that period back, okay? The green line should be in the right side of the market. If it's below, it's bearish. If it's above, it's bullish, okay? Bullish signal with the green line below price, bad signal, okay? A bearish one with the green line above the price, also bad one, okay? We need to take that into account before taking a signal, okay? On the contrary, if in this particular case, I get a selling signal coming from the indicators, well, that's quite positive and that makes the signal pretty strong, okay? Why? Because 26 days ago, the price was much more higher than the current one, okay? And that's not something that always takes place. That's the use of this green line, okay? Let's see another example in the dollar Japanese yen, okay? To see if we have a difference in the red and in the blue lines, and we get some sort of better signals than the ones we have been seeing in the euro Japanese yen. In this particular chart, you may see that I have had some sort of selling signal. I changed it to the 4-hour charts, right? Around this area, okay, in the cross of the red and the blue lines, when price opens this channel, right, at around 80.30, way below the cloud, okay, favoring the downside. At the same time, when the price was, sorry, I was trying to plot a line, okay, when the price, okay, this was the candle around 80.30, in fact, this. At the same time, when I have the signal and the fact is that the price was below the cloud, right, the green line was way below the price, okay, of 26 periods ago, confirming me the strength of the signal, okay? So that was one particular case when we have what we call a good, positive, strong signal in the Japanese yen cross, okay? And if, by contrary, okay, this price or this candles 26 days ago were at levels below 80.30, then that shouldn't be considered way positive, strong signal. However, it could have been biased. The fact is that, again, the green line should be in the right side of the market, okay? If the green line, okay, transverses the price chart in the bottom-up direction, this is a signal to buy, okay? On the contrary, if it transverses the price chart in the top-down direction, it could be also understood as a signal to sell. However, the fact is that to making a resume of how to read or interpret the chart using the Ichimoku indicator, right, keep in mind that we have strong signals, okay? We have a strong buying signal when the red line crosses above the blue one from below, okay? And the signal must be above the cloud. On the contrary, a strong selling signal, okay, comes in the opposite way of the cat and below the cloud. Normal signal, not strong one. And we say that a normal buying signal takes place when the red line crosses the blue one from below, okay? And the sign is within the cloud, okay? Meaning the indicators takes place in between the cloud, right? But remember that in such cases, price should be outside the cloud, okay? And finally, a weak signal, the one that has more possibilities to fail, is the one that takes place into the wrong side of the cloud. For example, if I have a buying signal when the price is way below the cloud, or also indicators are below the cloud, well, that selling signal will probably be a fake one. Same goes for a buying signal that takes place above the cloud, okay? And overall strength in this indicator, right, is shown to be with the seller, okay? If the green line, okay, is below current price, okay? And on the contrary, buyers are on control when it's the opposite, it's true, right? Keep in mind that supports and resistance levels are the borders of the cloud. And when the price begins entering the cloud from below, this at a resistance level, right? If the price is falling into the cloud, right, is struggling with a support. Whatever, while we are inside the cloud, better is not to trade when price is inside the cloud, not signals, okay? And the trend can be determined by simply looking at where the current price is in relationship to that cloud, okay? Above the cloud, positive, below the cloud, bearish. Alternative, if the price stays above the inside the cloud, as I told you, no trend is there, okay? One more thing that I would like to add is the fact that this technical indicator rates the strength of bullish and bearish crossover, okay? If a bullish crossover signal happens above the cloud, it's a very strong one. And of course, the bearish crossover in between the blue and red one below the cloud is also considered strong. So you have the cases of being able to determine either if the signal is strong, not only from where the price is regarding to the cloud, but also regarding to from where the cut occur in the opposite side, in the middle of the cloud, or in the right side of the chart. Okay? Okay. Anyway, thanks all for being here. Really my pleasure. Hope you had a great and excellent weekend. And see you back on Sunday, okay? With the market opening live coverage. My pleasure as usual to be with you and the FXTrade.com team. Anyway, thank you all for being here again and hope you enjoy your weekend, okay? Thanks and bye-bye. See you all.